Guided by the vision and philosophy of offering reliable and accurate diagnostic services and keeping pace with the technological advances and complying with the most stringent quality standards. Vijaya Diagnostic Centre.
Hello guys, welcome to our channel. Let's get rich. Today we are going to discuss IPO analysis of Vijaya Diagnostic Centre. So without wasting our time, let's get started. Vijaya Diagnostic Centre has announced that it is coming for IPO from September 1st to September 3rd. So let's quickly investigate the business of Vijaya Diagnostic Centre, look at the financials and growth aspects, and make a final decision on whether to invest in IPO or not. Vijaya Diagnostic Centre. It is one of the fastest growing and largest integrated diagnostic chains in southern India in terms of operating revenue. It is based out of Hyderabad and was established by Surendranath Reddy in 1981. The company had direct presence in Telangana, Andhra Pradesh, National Capital Region, and indirectly in Kolkata, Bengaluru, and Chennai. Most of the people treat this company as Andhra or Telangana related, but it is not true. I will explain it going forward. The company offers one-stop solutions for pathology and radiology testing services. It offers around 740 routine tests, 870 pathology tests, 220 basic tests, and 320 advanced radiology tests. It provides health checkups, home sample collection services, and a broad spectrum of customized health and wellness packages to its customers. If we look more into business details, it is having 80 authorized diagnostic centers with presence in 13 main cities across India, and it has served 15 million unique customers and more than 250 plus corporate employees till now, with 240 working professionals under it. These numbers looks absolutely great for a company with 40 years of experience in this industry. In the first slide, I was talking about the indirect presence of Vijaya Diagnostic Centre. If we look at the subsidiaries, we'll get to know more about this relationship. Vijaya Diagnostic Services Limited. It is a public company which is 62% owned by Vijaya Diagnostic Centre. It is present in both in Hyderabad and Kolkata. Vijaya Diagnostic also owns Vijaya Millennium MRI Services, which is present in Kolkata. Doctor's Lab Medical Services, which is 100% owned by Vijaya Diagnostic Centre, had its presence in Chennai. It also owns Namrata Diagnostic Centre, which is operated in Hyderabad. VDC Diagnostics Karnataka, which is owned more than 50% but not sure of the exact stake, and it is present in Bangalore. Having 3 subsidiaries under it that are Vijaya Diagnostic Services Limited, Doctor's Lab Medical Services Private Limited, and VDC Karnataka. Vijaya Diagnostic Centre is having indirect presence in Kolkata, Chennai, and Bangalore. I think we have reached more important part of this section, that is financials, which are very important to understand how the company is performing in terms of numbers. So if we look at the revenue side, the company has generated more than 300 crores in financial year 19 and 354 crores in financial year 20 and 388 crores. If we look at the revenue side, it has generated 300 crores in FY19, 354 crores in FY20 and 388 crores in FY21. The numbers have been continuously increasing, and if we talk about the profits, these numbers are also increasing in similar fashion like revenue. It has generated profits of 46 crores in FY19, 62 crores in FY20 and 85 crores in FY21. Looking at the balance sheet aspects, the total assets has been increasing from FY19 to FY21, and we can observe a slight decrease in total debt in that period, and also total equity has been increasing from year on year, leading to lowering of debt to equity ratio. If we look at the peer group analysis in terms of financials, we have 3 main competitors to focus. One is Dr. Lalpath Labs, second one is Metropolis, and the last one is Thyrocare. Looking at the price earnings multiple, Dr. Lalpath Labs has a PE ratio of 56.1 and Metropolis has a PE ratio of 112.57 and Thyrocare has a PE ratio of 69.44, whereas Vijaya Diagnostics is comparatively priced on par with a PE ratio of 64.29. If we see the return on equity, that is ROE, Dr. Lalpath Labs has generated ROE of 25.1%, Metropolis has generated ROE of 29.7%, and Thyrocare has generated ROE of 27.1%, whereas Vijaya Diagnostic Centre is performing on par with a ROE of 23.64%. Talking about the price to book multiple ratio, Dr. Lalpath Labs has P/B ratio of 25.2, Metropolis has P/B ratio of 19.5 and Thyrocare has P/B ratio of 15.7, whereas Vijaya Diagnostic Centre is having a P/B ratio of 13.78. So let's look at the final part of this section, IPO highlights. Vijaya Diagnostic Centre is offered at a price range of 522 to 531 rupees per share, and the issue is offer for sale of 3,66,000 shares of 1 rupee face value, which is aggregating to 1895 crores. And the selling shareholder in this IPO are Surendranath Reddy, Karakoram Limited and Kedara Capital. If you look at the post-issue market capitalization of the company would be 5,414 crores. This IPO is open from September 1st to September 3rd. One can check the basis of allotment on September 8th. If you are not allotted any lot, the refunds will be initiated on September 9th. Post that, the shares will be credited to your demat account for those lucky people, and then listing will be done on September 14th. A single lot consists of 28 shares, which is amounting to 14,868 rupees, and a retail investor can apply up to 13 lots, which is either 364 shares or 1,93,284 rupees. If you are an employee of Vijaya Diagnostic Centre, you can avail a discount of 52 rupees per share. And looking at the proportions for allotment, QIB is allotted around 50% of the issue, and NII is allotted around 15% of the issue, and the retail category is allotted 35% of the issue. So there is a more chance if you are retail investor or QIB investor, you can get allotted. So if you look at the GMP pattern for the past 3 days, on 26th August, the shares are trading at a premium of 45 rupees, whereas on 27th August, it is 42 rupees, and on 28th August, the shares are just trading at 20 rupees premium. So overall, the shares are trading at less than 10% premium. The main objective of this IPO issue is to achieve the benefits of listing on stock exchange, and moreover, the company will not receive any proceeds from this offer because all these proceeds will be used to make offer for the selling shareholders. And if you look at the promoter shareholding pre-issue, the shareholding of the promoters is 59.78%, whereas post-issue, the shareholders of promoters is 54.78%. So, getting to the ultimate part of this section, should we apply for this IPO or not? Since the diagnostic industry is projected to grow at a CAGR of 14 to 16%, considering all the factors discussed before, investors can invest for medium to long term perspective. And if you are looking for listing gains, I would suggest not to apply for this company as the GMP is very less. Given the market conditions, one may not get the listing gains. With this note, I am signing off. Please do mention in the comment box whether you are going to apply for this IPO or not.